Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on the last street, the bulls made a comeback in the last hour of trade to end at over 4-month highs. The Nifty held on to the 10,800 mark to end the day over 0.5% higher, with pharma stocks leading the charge. The Sensex gained over 200 points to end close to that 35,700 mark. PSU banks led the surge on the Lal Street, with SBI and IndusInd Bank helping the Nifty bank end 153 points higher in trade. But how the Qs stacked up for the day today? Manglam joins in now to tell us exactly that. Manglam, good morning. Over to you.
Good morning, Anisha. You know, as you rightly pointed out, yesterday was a good day of trade. So if you take a look at the Nifty, Sensex as well as the Nifty Bank, all of them moved anywhere between 0.5% to 0.6%. Most of the gains, as you pointed out, came in the last hour of trade. There was that bit of spurt. But what really outperformed was not just the mid-cap index, which gained about 0.8%. It was the pharmaceutical stocks. So I was just going through the list of top gainers, including the Nifty and the F&O gainers. 4 among the top 5 belonged to the pharmaceutical space. Nearly 7 among the top 10 belonged to the pharmaceutical space. So you take a loop in Dr. Reddy's, Granules, Glenmark, Strides, or any pharmaceutical company, they gained in excess of 3%. And remember, with this gain as well, these stocks are still about 10 to 25% of their 52-week high. So we will keep an eye out on whether this goes ahead or not. Because this month so far, while the Nifty has moved just about 1%, it is the PSU banks, like you pointed out, SBI led the gains yesterday, along with the pharmaceutical index, which has outperformed the Nifty by nearly 8 times, 8% gain seen in the pharmaceutical index. And when good news comes, it pours, because now we're getting in some good news coming in on other pharmaceutical stocks as well. Sun Pharma, yes, that has been in focus. Yesterday, finally, they received the closure EIR for their Halol facility, so we'll keep an eye out on that stock. And then we have the other pharmaceutical companies as well, Aurobindo Pharma as well as Torrent Pharma, receiving US FDA nods for certain drugs, so we will watch out for that. But you know what has confused me over the last few trading sessions in the last few months is the flows pictures, because they have been negating each other. The FIIs, while they've bought about, they sold about 1,200 crores in cash market, the second day running in excess of 1,000 crores. The domestic institutional investors went ahead and pumped in that money, so net institutional flows were positive. But the index futures place, there is where the negation comes in, because the FIIs, they're adding short index futures. At the same time, they're adding short index puts. So we need to know whether they're playing for a downside or they're playing for downside protection. So that is something we'll have to watch out for. The good news, though, is over the last 3 sessions, they have been adding short puts, believing that the market has some support. So let's take a look at a couple of levels. Yesterday, the last tick on the Nifty was 10,856. Day before yesterday, we reversed from those levels. So 10,850 thereabouts is important, given we have seen a lot of short positions added in index futures. Recent high of Karnataka election was 10,929. Watch out for that. 10,653 on the lower end has the 20-day moving average placed out there. We have a lot of central bank meetings all through this week, starting tonight. So we will watch out for cues from that. The SGX Nifty indicates more or less flattish sort of start with a mild red tick and oscillating between red and green. But as of now, it will be interesting to see how trade pans out today.
Okay, all right. Manglam, what about the stocks you're looking at? We'll have a TCS in there. JOCs are here to stay as well. Run us through all the stocks.
Absolutely. JOCs are here to stay till 2040, if you must, no less. So we'll start with TCS. The board is to consider buyback on June 15. There was a lot of chatter on the street, so we will watch out for that. Remember, the consolidated equity for the company as of March 2018 is closer to that 85,000 crore mark. So it'll be very interesting to see how much they go ahead and do buyback. But for TCS, it'll also be very interesting to see what is the acceptance ratio for retail investors. Because last time I remember that was the main point of discussion as far as TCS buyback and as well as Infosys buyback is concerned. But it'll be also interesting to see how many people tender in, because since the last time TCS gave a buyback at around 2,800 rupees, bonus adjusted 1,400 rupees, the stock is up 27% from there. So we will watch out for that. Yes, you said JOCs are here to stay. They've extended their license with Jockey till 2040. So watch out for that. They say Jockey or nothing till 2040. Sun Pharma gets the EIR for its US FDA, from the US FDA for its Halol facility. Bharti and Idea, well, every once in a while, Jio comes out and lowers their price of the data that they are offering. Right now, it's gone as low as 1.77 rupees per GB. So yes, 1 GB data is for less than a candy as well. So we have to watch out for the other stocks, how they perform in trade. Bharat Forge has made a 34% acquisition in Teva Motor Limited. Punjab National Bank, after a long time, I think there's an upgrade coming in from on account of their counterparty risk assessment. So Moody's has given an upgrade to them. Shalby Hospital, well, interesting, because the CEO, Mr. Ravi Bhandari, has tendered resignation. The company has not given any reason or something, so we will watch out for that. And then finally, I'll be watching out for a lot of the housing finance companies, because the area under coverage has been increased by more than 30% under the Pradhan Mantri Awas Yojana.
Okay, Mangam, thank you so much for that. So, jocks here to stay till 2040, as well as data being cheaper than candy. So, a lot of important cues lined up for the day. But it's time now for a quick break. Up next, RBI Governor deposes before Parliamentary panel, calls for amendment to the Banking Regulation Act. Details on the other side of this very short break. Stay tuned.
Well, bank frauds are on the rise and the RBI needs more teeth. The Governor of the Reserve Bank of India had a clear message for members of Parliament as he deposed before them. Sources say Urjit Patel has also made it clear that the current laws do not provide adequate powers to the central bank to control public sector banks. Ritupurna Boyan filed this report earlier.
Answering to a written reply by the members of Parliament, the RBI Governor said that there is a need to amend the Section 51 of the Banking Regulations Act, because the current provisions does not give enough powers to the RBI to regulate the public sector banks. In fact, he detailed out the areas on which the central bank does not have powers to regulate public sector banks. Around 10 of these specific issues he red flagged. For example, he said that the RBI does not have powers to appoint or remove CMDs of PSBs, or grant licenses, impose conditions related to licenses, removal of managers, or supersede the board of directors. In addition to that, replying to another written question, the RBI Governor defended the revised framework for resolution of stressed assets, saying that the lenders should monitor borrowers more proactively and also should identify financial stress early on. In fact, he went on to say that the revised framework seeks to shorten the time between the manifestation of a financial stress and decisive action to resolve the same. Last but not the least, he also told the members of Parliament that through the SARFAESI Act, 1.2 lakh notices were issued in FY18 and rupees 34,261 crore was recovered through action through the SARFAESI Act.
Okay, moving on then, Kotak Mahindra Uday Kotak, one of the largest private bankers in India, feels that this is not the right time to consolidate public sector banks, especially when country is less than a year away from general elections. Now, in conversation with Ritu Singh, he said that though the insolvency process was going through a state of evolution, the IBC has decisively changed the balance in favor of the creditors.
At this point of time, 1 year before election, it's the wrong time to be thinking about consolidation of public sector banks in any shape at this point of time.
But when do you think, do you think there is a scope or there's reason enough for so many banks to exist when a lot of them are doing the same work and are not in a good position? The government is also not able to capitalize all of them to the extent needed.
Right time you have to think about these things, okay?
So, you also spoke about the public-private bank structure. You said, 70% market share of the public sector banks, 30% private sector banks. That could change in the next few years. Do you still maintain that view?
I think we are seeing the share change in terms of loans, and that is a process which really depends on how the growth happens. But I think right now microeconomy is doing very well. Credit demand is good, and it doesn't matter whether you're public or private. If you have the capacity to support growth of the economy, we should be doing it, and we are really happy to be supporting the growth of Indian economy, and whatever the share is an outcome of that.
So, you've been a big champion of the IBC, but, are you as a banker really satisfied with what we've seen so far? I know you said the government has been quick to respond with changes, but some of those changes, especially the Section 29A, has been the cause for a lot of these delays.
No, I think some of the first successes are good. The process is evolving. Some of it is taking a little longer. In many cases, 270 days period is getting over. So we have to watch the process, and I think this is a process of evolution. The most important point about IBC is it has decisively changed the balance in favor of the creditor in control versus the debtor in control. And I think that's a very powerful move.
But sure, sir, while there are haircuts for the bankers, that's one thing to be considered, but the minority shareholders, I mean, they have a left, they're left a
I think
little...
an equity owner's right to claim is after the debt owner.
Okay.
So that is first principles of corporate finance.
Well, the Finance Ministry is drafting an annual return form for filing GST. This will help the Revenue Department collect additional data from taxpayers. Sources say the form has to be filed additionally along with the existing GST R3B. Timsi Jaipuria joins us with details. Timsi, what is the government's rationale behind this particular move?
Well, that's right. What we understand from government officials is the fact that Finance Ministry is currently working on a new annual GST return form, which is likely to be discussed in the next GST Council meeting. Now, this annual return form will be in addition to the existing GST R3B, which is to be filed on a monthly basis. Now, what we also pick up from Revenue Department sources, the fact that taxpayers are sharing limited information through monthly GST return forms, and which is why this new annual return form is to be discussed. Government officials also indicate that Revenue Department is unable to track the required info which is filed by the taxpayers through these monthly GST return forms. The new annual return form currently being drafted by FinMin will be then later on, after GST Council's go ahead, will go to GSTN for trial runs. And once this trial run is on, GST laws, which already have provision of a comprehensive annual return form, will notify this new annual return form. Now, some of the benefits and some of the details that would be sought in the GST return forms will be what is the annual turnover, what is the breakup of import and export, sales made to the domestic and international market, annual claims of refunds of both IGST and ITC. Government sources have also indicated that annual return form will seek all business details to help government maintain invoice-wise data, help government with invoice matching, help government cross-check returns to avoid tax evasion. It will also help government to check any wrong claims of credits and refunds, and help government maintain a proper database for detailed analysis for future policy building. So let's see how soon this annual return form comes into picture. Back to you.
Okay, it's time now for a short breather on the show. Up next, a big boost for Sun Pharma from the US FDA. Details on the other side of the short break.